So, hello everybody, this is Bob Anderson, and I'm going to go over my three trades I took in gold today. Today is June 5th. So, it's the day after the video I did yesterday. I had a pretty good day, but I want to show I just consistently using the same trades so that, if you just see the same thing over and over again, it may seem mundane, but if it puts money in your pocket, what do you care? So, anyways, and I was done today at 10:38. I only traded gold. I had seen some trades set up in the NQ, and I saw some set up in the RTY, but I did not. I did not take them, and I stayed away from oil today. So, what I want to do is I want to go over my charts and show you the trades I took in gold. It was difficult today because in today being June 5th, we had ADP news at 8:15, which kind of throws things into a tailspin. We had PMI at 9:45, and we had ISM at 10. On top of that, we had the equity markets open at 9:30, which I've talked about is a difficult time to be looking for a trade. So I had a lot of grenades to dodge during the day. So I really did not anticipate or expect much out of today, and I tried to dodge those times. I mean, that's four I just named right there that you need to be really careful of if you're going to trade gold, for example. And that is these three pieces of news right here, and then the equity market itself opening up at 9:30. So a lot of grenades to dodge, and so I'm going to go over these trades. Now I took three. I break even on one, lost a tick on one, and made 20 ticks on the other. So net 19 ticks for the day on a couple contracts. So I'm going to go over that. I'll show it to you, and we'll just make this simple, sweet. If you didn't see the video that I did yesterday where I went over these exact same trade setups and had, I went much better yesterday. I think I had one break even and two wins, and I had some heavy wins because the market I felt more comfortable yesterday, so I had double entries. If you remember. But anyways, today I didn't. I just went with the single breaks, just the single breaks. Anyway, so let me show you those and we'll go from there. Talk to you later. All right, hold on. Okay, so this is gold again. All right. And so if you'll see in here, I took three trades. I did not follow one of my rules in one of those trades that I want to point out. Okay. And by the way, the trade worked, but it didn't work for me. So we'll go over that. We'll go over the rule I broke and what I was thinking when I broke it and blah blah blah. All right. So you have gold opens at 8:20, which is interesting because it blew up, created Donchian Channel low, came right into the 5-minute red line, and then there it went. There it went. By the way, all the settings for these lines, the Donchian Channel, the daily high, all that stuff are in the description of this video. Also, these are all ninja charts. This is the overnight open. As those of you who watch my videos know that this is one of my favorite lines on the chart. I will put this line as a pivot. I will put this line as a pivot line against anybody's pivot lines, period. Anybody's. Then you got your daily low and your daily high at the time. And then you got your Donchian channels, your 5-minute red line, and your 1-minute gold line. All right. So, anyways, so we got out, the market opened, did its thing. We had some pullbacks here that weren't smooth. See, we had tops that changed and rotated and whatnot. So we kind of got wishy-washy. And we had this candle right here form, again, below this gold line, and it ran up and through. So here we are about 9:20 in the morning. So I have a little bit of time. I have a little bit of time before the equity market opens if I'm going to get a trade. I'm not around those news events we talked about, blah, blah, blah. So what happened? We get a nice smooth pullback. And we had a long, look at the hammer candle here. Look at that hammer candle. Oh my God. See the reach? That's where they're grabbing those extra stops. I mean, it's like the writing is on the wall that if this thing turns and goes the other way, we're going long. I mean, look at that candle. That's a beautiful hammer candle. Came back up. Boom. I was in it long, came up, rotated over, knocked out at break even. I think it went up about 10 ticks or whatever, and I got knocked out at break even. Then it rotated over. But I mean, I was really cautious here because, again, by the time I entered, it was 9:24, which means we're only 6 minutes from the equity market opening. So I wanted bing, bing, and then be out. You know what I mean? 20 and done. But from the moment this candle got me in, I grabbed my stop, threw it underneath here. And then when this candle stopped, I threw it at break even. This thing rolled over, wham, done. I'm out. I mean, I'm just trying to be very cautious because I want that big candle reaction that leads to another candle that I talked about in yesterday's video. So anyways, then we came across, and then we had a news event right here at 9:45, which threw the candle way up and then threw the candle way down. And I sat here and I went, oh my God. Let's go back. Let's go look at something for a second, okay? We have come off of a daily high. And besides this news flash right here, this is a smooth pullback for the 5-minute red line. Now, the rule I broke is it's not 10 o'clock. Now, it's a little harder with gold when I talk about 10 o'clock because gold is already calmed down. Because gold, you got to remember, gold opens at 8:20 in the morning. It doesn't open at 9:30 like the equity markets. The last bit of news was over. The equity markets are already open. The equity markets are acting crazy, but gold is in its rhythmic pattern. And so I took the long here. It ran up, came back down, knocked me out. And to be honest with you, I wasn't going to give it any room anyways. I took a tick loss here. Sadly, I don't know, maybe not sadly, 5-minute red line trades need a little bit more room. This thing actually worked. I mean, it worked. Look at that. I mean, it worked. I didn't let it work. Does that make sense? But it worked all the way back to the daily high, which is exactly what I've talked about. If you get a 5-minute red line trade, one direction or the other, and it's relatively early in the day, and you're getting that daily high, that rotation is most likely going to go back to your Donchian high and or your daily high, or both. In this case, it's both. So I mean, from the entry, which was 59.7, to the top, which is 65.3. I mean, you're talking about $500 a contract if I'd actually held it. And I've talked about this as a swing trade for swing traders. But anyways, and then what does it do? It comes up, creates a daily high, slams through it. I mean, again, these guys were vicious. Oh, of course, this was the 10 o'clock news right here. Sorry. Then you had the 10 o'clock news. I'm trying to squeeze my trades between news and what the hell's going on. There's the 10 o'clock news, slammed it down, ran it back up, came back down. Now, let me point something out to you. If you're looking at charts after the fact, meaning if you're not looking at them live, okay, it's important to understand that this, because I sat here live, on my chart, this right here did not pierce that gold line. It was literally about a tick from piercing it. Because see, what you got to understand is when this price started going up, that's what pulls the head of the gold line up. So the gold line was really sitting down even more than it shows here. okay, in live. So if it pulled down about a tick or so, this would have been my trade. I mean, shoot, we created a daily high. We had a crossover. Look at this. We had a crossover of the gold line, crossover of the red line, everything. I mean, I was chomping at the bit. Smooth pullback, smooth pullback, smooth pullback, smooth pullback, smooth pullback. I mean, I was chomping at the bit to take this trade, except it did not pierce my gold line. I did not take the trade. Okay, folks, I am trying my damnedest to stay disciplined, because if I know that if I just stay disciplined, I will continue to create profitable trades. And so I don't want to chase things. I don't want to be caught in limbo. You know, if you're waiting for it to touch the gold line, think about this. If you take the break of this, now all of a sudden you've got a break. Okay, you've got a break, but you haven't hit your gold line yet. So how many times do you see price break the tops? Or I'm trying to think of an example. Break the tops like here, and then roll back into your gold line to actually do your gold line trade, to get into your gold line, which is your 9 EMA. And now you're sitting here. Just visualize this. You're in from here. Now you're sitting down here, waiting for it to pierce so that you have that confirmation. Do I get out of the trade? Do I stay in the trade? And then when it does pierce and it starts rolling up, remember, you don't have a smooth pullback anymore because you took the break. So I'm just trying to stay disciplined. The more I'm disciplined, the better off I'll be as a profitable trader. I'm trading multiple accounts, so I just need to find the right trades. Does that make sense? So what is the right trade? Well, we roll right back up, created a new Donchian high, smooth pullback, smooth pullback. This actually did pierce in live. This is kind of confusing. What happened is when this one, I don't know, this one opened up from here. This candle kind of flattened out. But in live, not Memorex, this was a pierce of the gold line right here. That was. And I went in right here, boom, boom. And I mean, I literally hit the 20 ticks to a T. I'm surprised, even as I'm sitting here talking to you, that I got filled. Now, granted, it rolled down and it rolled up. I would have gotten filled anyways. But, I mean, who wants the stress? And what am I looking for? What was yesterday's video about? I'm looking for the things that are going to create the very large green candle or the very large red candle. It gets harder and harder and harder to identify the price action as we go further into the summer. It's going to be harder and harder and harder to identify the price action that's going to create those big green candles or going to create those big red candles. To be perfectly honest with you, the fact that this ran up and only went exactly 20 ticks from the break has me nervous, because we're sitting here at June 5th. If you guys remember in yesterday's video, I had the exact same thing happen to me. And that is disconcerting, because what you would like to see is it to go through your price, about 4 or 5 ticks at least, because that means there's still enough traders throwing it one direction before they throw it the other. Whereas there's just a lot of traders that are looking for that 20, and that's what they're getting and getting out, and there's not enough sustainability to push it through there. That's happened to me 2 days in a row with gold. I've gotten lucky. Anyways, so those are my trades for the day that I actually took. Again, I was fine with it, because then the market just started getting all, whatever. I mean, this is just meandering and meandering. And again, after 11 o'clock, I'm not looking for these gold line trades anymore. I'm only looking for red lines. And then we never had any smooth pullbacks. We had no smooth pullbacks to the red line, just blah, blah, blah. This is way too non-smooth pullback. This is a perfect example of non-smooth pullback. You went down, you rolled up, you rolled down, you rolled up, you rolled up. And the reality of it is, let me tell you something about moving averages so you guys understand. Moving averages and price will ultimately always come together. This is something to understand. Moving averages and price will always come together, even if price isn't moving. Okay. And you can't make money without price moving. So if the reason the moving average and price came together is because time has elapsed, then it's not a good trade. If the reason price and the moving average come together is because price ran to that moving average, then you got trades. All right. So I'm going to take just a second here and I am going to grab, I think, I'm going to grab my NQ chart. Hold on here because I wanted to show you guys something. All right. Let's see. Hold on. Where is it? Here it is. Sorry. Had to find it. when I have my video going, I got extra things going on my screens. Sorry. So anyways, let's just talk about NQ, for example. All right. So the NQ had a trending day today, apparently. So this is 8:30. Remember, we have all this news. We have the open. Do you see why you stay away from the open and all this stuff until, like 10 o'clock, even for the 5-minute red line minimum for the 5-minute red line? I mean, gold doesn't look anything like this. Gold looks absolutely nothing like this. But I will show you something interesting. Notice, again, just an observation, not a trade. Notice red line up, red line up, red line up, red line up. You guys not notice that? Because that red line, as I've discussed before, it's a direction indicator. It is a direction holder for the bigger time traders, bigger time traders, 5-minute traders, in direction holder for the market direction. And so it is, look at the beating that it's getting. Look at the beating. Look at the beating. Look at the beating. But the market wanted to go long. So they kept holding it on that 5-minute red line. Okay, so now let's keep watching. Let's just watch this for a second because I want to show you guys something now. So now we get past all the news and the noise and the craziness. And notice on this pullback, we had this candle higher than this candle. So by the time we got to the gold line, there is no trade because you don't have a smooth pullback on the 1-minute gold line. Okay, but anyways, let's watch. Oh, break a new high. Smooth pullback? No, we didn't get a smooth pullback, but the trade worked, actually. Look at that. Actually, that trade worked. Then you have a smooth pullback right here. Boom, boom. There's your trade right there. By the way, this may not look like much. This may not look like much, but that's $300 right there. One contract. It doesn't look like much on paper, but that's $300, one contract. But anyways, and now you're after 11, but what you're seeing the market is trending. So when the market's trending and it's moving, you can step in on these trades. Just, but let's keep going. I want to show you something. Watch this. Watch this. Where are we? We're going to go higher, I think, first. Yeah, okay, it's in the afternoon that this happened. So see how price and the moving average will ultimately come together, because moving average is coming to price. Okay, if the moving average comes to price, then there's not a trade. If price goes to the moving average, then there is a trade. That's a good way to look at things. So let's just keep going. Let's just keep going. Now we're after 1 o'clock. Okay, we got a daily high right here. We just keep creating daily highs in the NQ. All right, daily highs, boom, here to here. Now let me ask you a question. Oh, by the way, this is a Donchian Channel high. This is a daily high. Let me blow this up. I want to show you guys something, how tricky these algos are. This is a daily high by 2 ticks. 2 ticks. Okay? So your rotation spot is here. It's not here. Because this is your high. Now, if that's your high, okay, and it's after 1 o'clock, and this is your pullback, is that a smooth pullback on a 5-minute red line? I think the answer is pretty clear because it started from here. It didn't start from here. It cleared by 2 ticks. Remember, the break of the candle is your start. Boom, boom. Watch out. These are swing trades, by the way. And you're gone. Where did it go? Just like the trade I showed you in gold. Just like the trade I showed you in gold. It went back to the daily high. And then when it went to that daily high, it rolled over. And that was it. See, there's certain things that the market does that's intentional. And they're doing it because they know where they're going, they know where they're starting, and they know what they're trying to accomplish. Anyways, that's my video. Listen, I can hardly stomach trading the NQ myself. But I just thought I'd show you that because it is an instrument that's moving. By the way, oil had something similar to that today, something similar to this today. But anyways, that's my video for the day. I hope everybody got something out of it. I do know that I'm just really sticking to as simple as I can. Entry, grab my stop, put my start, put it in. Don't let the shenanigans shake me out. For example, I would obviously been shaken out here. I mean, once it rolled up and hit here and then slammed back down. I'm not, but I'm not swing trading either. Anyways, I'll talk to you guys later. Bye.